Yes, you are listening to the Ready, Set, Retire radio podcast with Steve Anzoni. My name is Jessica Forkel. Get more details on the website at fairwayfinancial.net. We've talked about it, for the past few weeks. A lot of folks are calling you, Steve, and saying, hey, man, does it really matter who's in the White House, where my financial future goes? Do I need to start kind of hedging my bets on who I think's going to win? And if so-and-so gets in, what's going to happen? If so-and-so gets in, what's going to happen? I mean, how are you handling these types of conversations?
I get it. I mean, I have clients who have strong feelings, both sides. Reality is the market kind of does its own thing regardless of who's in there. Mm-hmm. It's the economy that I'm a little concerned about because even though the market looks good today, I just think it's a little false hope. I'm just seeing some things that I don't like, with underlying things. Like I keep hearing that inflation's at 2 point something. Really? What country? Because I don't see that at the stores. I don't see it with food prices and, reality items. I mean, gas has flattened out a little bit, which is great, but I don't see it with most other items. So it'd be nice if they can just be adults and talk about the issues, but that doesn't happen in our world, and we have to fight our way through and check out reality. It's kind of like our retirement plans, mm-hmm. where, most people have 401ks and they just go along with the flow and they hear things and they accept it without checking into it. Like, my whole thing is trust but verify.
Yes,
right?
Absolutely.
That's been my statement for years and years and years. And I stick by that. I've been around for a really, really long time. And I pride myself on trying to help people get the truth out of things. And there are more than one option, in your 401k and your IRA. And unfortunately, you're not getting that story from where the money is because that's the people who manage it want the money to be there, which, again, makes sense if you're managing the money. But there are different ways. Like I've had people come in and say, boy, Steve, I don't mind being in the market a little bit, but I get a little nervous as I get closer to retirement. I wish there was a way I could take this pile and figure out a paycheck for life. And I just smile and I said, I've been doing that for over 38 years. And they look at me and go, what do you mean? I go, I've been doing this for 38 years. I've been showing people how they can get paychecks for life. So to come back around and look at the election, I wouldn't freak out about it too much. I would focus more on the economy and what's going to be done with who gets in, how they're going to fix things in the economy, because the market is going to take care of itself, and we have to be more proactive with our money. And especially as you near or are in retirement, you need to be proactive. Interest rates are still good. And you all saw the signs. They are starting to come down. Now is the time to lock rates in.
Now, I want to talk about the market a little bit, as you kind of mentioned it here just a few moments ago, because we saw the S&P last year was up 24%. This year, the S&P is up just 20%. So to have 2 years in a row where the market is up at least 20% is very unusual. It hasn't happened since the dot-com days back in the late 1990s, if you remember that. So the chances of a stock slowdown are increasing. Again, this is why folks are worried about what's going to happen with the election, what's going to happen with the economy. So are you positioning clients to be prepared for a possible pullback in 2025, Steve?
Well, yeah. And again, it's not that I'm trying to prepare people for, oh my God, the world's going to end and all that stuff. I'm just trying to impart common sense into the formula when it comes to retirement. I mean, think about it. You shouldn't have all your eggs in one basket. And I know by default, many of us do, because the 401k is definitely a great way to go for accumulating retirement assets. I mean, it's simple. It's payroll deducted. You don't see it. You don't miss it. I get it. But when you get to 60, 62, 65, so, in that range, and you're trying to figure out your retirement and whether or not you can afford to retire, think about that statement. What is it that you are actually trying to do, right? You are trying to figure out cash flow and income. So you've got to focus on income. So when you're trying to say, can I retire? What you're really saying is, do I have enough income to retire? And for most of us, The only guaranteed formula is Social Security. I mean, because 95% of us don't have pensions anymore. We have 401ks, which are not pensions and are not guaranteed. Even though I've seen some statements recently that show income at the bottom right, it's all projected. And ironically, it's projected using annuity quotes. But you're not in an annuity in a 401k, you're in the market, which again is not necessarily a bad thing unless all your money is there and you're trying to plan for a cash flow and an income. It's almost impossible to do because I don't think you want to guess with the pile of money. I mean, you want to have it in different buckets, which is why I try to preach that at my workshops that I do, my live events, my radio here we're talking about, and the book that I wrote, Tee Up Your Retirement. It's all geared towards establishing buckets for certain reasons. And you got to focus on the income. The market's going to do what it's going to do. And we've had 2 great years in a row. And believe me, I'm thrilled about it too. I got some money in my 401k. I got some money for my grandkids in it. So we're all happy when the market's up. However, we need to also focus on cash flow. And so that's the game plan. So the idea is to focus and split the money up and put some of it into a plan that will show you cash flow, not projections, but actual numbers that you can use to help you plan solidly for retirement income.
Now, Steve, listen, times have been tough for everybody. You got a lot of people out there just hoping for some kind of windfall down the way. And part of that is playing the big games out there, whether they're scratch offs or maybe you play the Mega Millions. I do. I find a couple dollars in the car and I say, okay, I'll do a couple quick picks and try to become a millionaire overnight. Well, apparently they're trying to make things more difficult for us folks just trying to get a leg up in the world because the price of a Mega Millions lottery ticket is about to go up next April. The price right now is $2. They're about to change that to $5 a ticket, guys. More than double the price there. I mean,
inflation, baby.
Crazy. I mean, all the people that are really needing the money, they're increasing the price. To me, it's kind of the oxymoron of what are you talking about? I'm playing the $2 because I hope I can win $5, but they're doing this in hopes to, lower the odds so that possibly you can win more. I don't think it'll be that way. I think more people will still continue to play. Anyway, I take that example about the Mega Millions here to talk about a possible windfall that, a lot of people are praying for, right? To help fund their retirement. Maybe they're sitting there hoping, well, if I win the Mega Millions, I can finally retire. Well, sitting on a hope and a wing and a prayer is not the way to go into retirement. How do you go into creating a balanced strategy and plan for clients and you take out all this calculated risk?
What you said, that just kind of reminded me of Animal House. That scene where he's looking at the student, fat, drunk, and stupid is no way to go through life, son. But
that's very true.
So funny.
Lessons for everybody,
on that trail. But no, I mean, look, it'd be nice to win a whole bunch of money, and the odds are obviously highly against you. But look, people who've played it forever are going to play it forever, whether the price is $2 or $6 or $5. Okay, they're used to doing it. It's their routine, and if they have a special number they use, they're not going to skip a week. So
that's right.
It is what it is. But really, what we really should look at is, ironically, these sums of monies, most people, I don't think, know this, but those sums are paid out in the form of an annuity. Did you know that?
I did not, yeah.
Yeah. So when someone wins, $10 million, and they elect to get whatever it is, $1 million for 10 years or or 500,000 for 20 years. They're electing annuity options. And the lottery, how they make money is when they come up with the number, right? It's the lottery is at, 50 million, whatever it is. They put it out there to bid. And insurance companies bid on the 50 million, right? Because remember, it's not present value. Okay? It's spread out over time. And if you take the present value, it's going to be a lower number. So if it's a $50 million jackpot, it might only cost the state $42 million to provide the payout for the 20 years or the 10 years. And that's where they make their money. So on the spread there. So it's an annuity. So ironically, most people have a windfall right in their own backyard in the form of a 401k or an IRA, and they just don't know it yet, okay? They don't realize that they can take whatever it is, let's say $500,000, and they could put it somewhere, and they can grow the money. Now, these numbers I'm telling you are accurate as of yesterday, all right? I don't know what Monday's going to bring, but I'm 99.9% sure it's going to be exactly the same. But most of these companies out there today are willing to grow the money at anywhere from 8.5% to 12% a year, Jess, in writing, on paper, okay? This is not a projected number. Now, the reason they're able to do that is because that pile of money that's growing is called the income value. And just like it sounds, it means that if you're, I don't know, you're gonna, let's say you're 62, you got $500,000, and you want to retire at 67. So they're going to guarantee you, let's just say 10% for those 5 years deferred. So if you've got $500,000 in there, it's going to grow at 50 a year. So in 5 years, that's 250. So your pile of money will be worth $750,000. Then at 67, they're going to guarantee you a payout rate. And this is where the rates today are higher than they've ever been in the past. Some of these companies are still paying out over 7.25% on that pile of money. Can you imagine growing it at 10% and paying it out at 7.25%?
No.
That's a windfall, all right? And those numbers are not projected. Those are a contract in writing. So even if in the future, and I'm talking the near future, right, they drop the rates, and there's already indications that these companies are going in that direction. If you look at bank CDs, you can't buy a 2 or 3 year CD anymore at 4.5, 5. They don't want to sell them because they know that rates are going down. So you can lock this in for any number of years, whether it's 2 years, 5 years, 10 years, 15 years. However long you defer that money is how long they're going to guarantee you that money's going to grow at that rate, and the payout's going to be there in writing. So can you imagine knowing what your check's going to be 7 or 8, 9 years from now? Do you think that will be helpful in your planning process?
Yeah.
Of course it would. So people, there are unbelievable options out there, and you gotta, it's like the cable company. You know, the cable company's not going to call you and say, "Hey, man, you know, I'm gonna give you a really great deal."
Yeah, you got to call them.
I'm trying to be proactive by letting people know about it, but, you know, we're just one show Saturday morning, and sometimes the folks here at the station are kind enough to redo the show at night for you folks who sleep in. But, you know, I'm doing my best to get it out there to the public, and you need to know about this stuff. I mean, give a call. Why wouldn't you want to know what the numbers will be in the future? I just had a gentleman come in, right? And he had an existing annuity many years ago. It was like, I don't know, 15 years old. And it was called a variable annuity, which means that the money goes up and down with the market. And he said to me, "You know, Steve, I'm a little older right now. I don't like this up." And he goes, "I like the up stuff. I don't like the down stuff." He goes, "So I'd really like to know what this pile can produce for me in 5 or 6 years." That was his exact quote. And I said, "Well, you're in luck. I could do that for you." And he looked at me, he goes, "Really?" I go, "Yeah, let me give you some quotes." And I gave him the top 3 companies out there that I had and all the payouts. And he goes, this is in writing? He goes, "This is exactly what it will be." He goes, "Even if rates go down?" I go, "Yeah, you're buying a contract. The contract is 2 parties. The company is promising to do their job if you promise to do your job, and which your job is to give them the money and let it sit there for as long as you need it to sit there. That's it." He goes, "That's unbelievable." So, yeah, so it's there, it's real, and it's been around for many, many years. It's just really never been around at this high of a payout, Jess. It's really Christmas coming early, and people need to understand what the potential is for them in the future. They need to look at this. They have to look at this. It's crazy to not look at this and sit there and say you're doing retirement planning. So if you're interested in learning about what your money today can produce for you in the future, guaranteed,
more details on the website fairwayfinancial.net. That's fairwayfinancial.net.
Steve Anzoni is a licensed insurance provider by the Division of Insurance and is not registered as an investment advisor. Insurance and annuities offered through Steve Anzoni, Massachusetts Insurance License 3851053. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company. Read your contract for restrictions, limitations, or penalties. Steve Anzoni is not licensed in all 50 states. To find out if Steve Anzoni is licensed in your state, please call 508-398-3337.